Money Monday, presented by Oklahoma Central Credit Union.
It is Money Monday, a segment here at 4 o'clock where we talk about easy to understand ways to navigate our finances. We do it with the help of our friend and financial expert, Paul Hood from Hood CPAs. Paul, good to see you, my friend.
Good to see you, Brian. Happy Monday.
Happy Monday to you. We're going to start with a stimulus question. We get lots of them. A lot of folks still waiting for their money to come in. Stephen writes in asking you, do you still receive stimulus money if you have a set salary at $60,000? And what is the limit on combined income with family?
So what you look at is it's not really what his salary is. It's a number on your tax return called adjusted gross income. For a single person, that number is $75,000. Below 75, you get 100% of the $600 and the amount for your kids. It starts phasing out for an individual and is completely phased out at about $87,000. I think it's $5 per $100 over the $75,000. For a married couple, it's $150,000 or below of adjusted gross income, which is all your income, your interest, dividends, salaries, business income, whatever. So for married couples, $150, and it phases out, I believe, at $187 or $174. That's what it is, phased out. And then head of household, I think it's about $117,000. So your wages isn't the only number you look at, or your salary. It's your total income or your adjusted gross income on your tax return. And that's based on 2020. I mean, they're estimated on 19, but it's will be finalized on 2020. And we'll make an adjustment on the 2020 tax return if your income was lower in 20 versus what it was in 19.
And Paul, any advice on those that are still waiting for their money?
Well, yeah, I mean, again, be patient. The IRS has made and Congress has made steps to where when we file your 2020 tax return, we will actually look at your 2020 income and then report what you got for the first and second rounds of the stimulus. And if you didn't get enough or you didn't get it, you'll get the extra amount with your tax return. So at the latest, we're looking at when we file your April tax return, this year's tax return by April 15th. Now, the IRS has delayed the starting of tax season until, I believe, February 12th of this year. So you can't even electronically file your return until February 12th.
All right, we have time for one more question. Let's get to April's. April wrote in saying, my daughter just started a new job. She's 22. Are there benefits to keeping her on our medical insurance, or should she consider options through her new employer?
So, yeah, with Obamacare and all that, they allowed you to keep your kids on your insurance, even if they're married, till like 25, 26 years old. So what I would look at is what coverage can the daughter get at her new job. Sometimes employers pay for the employees and not the family. That's what we do at Hood CPAs. So I would look at the cost. Is it cheaper to have her on yours than hers? And that's really the only benefit is the cost side of it.
All right, Paul, thank you so much. And if you're watching right now, you have a financial question you would like for us to chat about next week, you can send in your question right now to moneymonday@griffin.news.